Well, good afternoon, everyone. This is Tony Whitbeck. I'm the CEO of Key Management Group. And with me today is Todd Doherty. Todd is our Director of Acquisition and Legacy Planning and also our M&A expert. Todd's going to be taking us through the majority of today's content. But before he does that, I would like to give you a brief overview of the services that we offer at Key Management Group. So we really bucket our services into 4 different categories. We have practice management, outsourcing, human resources and risk mitigation, and then acquisition and legacy planning. And that's really the topic for today, is the acquisition and legacy planning. Under practice management, we have our strategic leadership package, and this is where we work one-on-one with the owner of the business to help them in all aspects of their business, but really to help them grow. We have our operational performance package, where our practice management team works with the staff and the operational side of the business to help it become more efficient and more effective. And then we have our complete practice management solution, which includes both our executive coaching as well as our operational performance package. From an outsourcing perspective, we do client meeting preparation and financial plan production. We do about 300 client meeting preps every week, and we do about 1,500 financial plans on an annual basis. We offer a number of services regarding human resources and risk mitigation, and here we're going to deal with things like recruiting, onboarding, offboarding, your human resource file reviews and compliance, employee handbooks and policies, AFA compensation, incentive structures, and performance reviews. And then finally, our acquisition and legacy planning. We do business valuations. We do probably 400 a year for advisors and banks. We have our turnkey continuity plan. If you're on today's call and you don't have a written continuity plan, now is the time to get one. We have a deal-making service where we'll help a buyer and seller determine the value of the practice that's being bought, structure the deal, and then provide all the legal agreements and legal support as well. We offer an escrow service, and this is oftentimes used in the purchase of a practice, where a portion of the purchase price is held back for the attrition clause, and we can hold that in escrow. We have our advisor legacy program, which is where we buy and sell practices, and then on that platform as well, we have our elite buyer program. And you're going to learn a little bit more about the advisor legacy platform today from Todd, and if you're not on that platform, you should join as a buyer. So with that, I'm going to turn it over to Todd, and he's going to walk us through the rest of today's presentation. Todd?
Thank you, Tony, and thanks to all of you for taking time out of your schedule to join us today. Through our various succession-related services, we've participated in hundreds of practice transitions over the years. And one of the constants that we've noticed is a lot of the buyers, and probably 80% of those, hoping to buy a practice or our prospective buyers in our own practice sales, are not well prepared or don't have the proper skills. And as a result of that, there seems to be a smaller percentage that are getting most of the success when it comes to closing deals. We certainly have an interest in having a well-educated and prepared buyer population, because it makes the deals go much smoother. And ultimately, what the sellers are looking for is a buyer who can be a great successor for their clients. So as a result of that, we've put together these 10 steps that you can follow, and hopefully you'll take this away. We do have a handout of the 10 steps available for you to download in the system here. And if you follow these steps, or at least a majority of them, we think you'll be a better prepared buyer and more likely to close deals. Another item that I wanted to share is a pretty simple framework in how you would manage your interaction with any prospective seller. And it's a good thing for you to write down and keep in mind whenever you have an engagement with a seller. And it's quite simple. It's a 3-step process, and it's: does the seller like you? Number 1, do they trust you? Number 2, and can you help them achieve their goals? Number 3. And if you keep that in mind for all of your interaction with sellers, I think you'll be much more successful. And keep in mind that the primary seller's goal is who's going to take the best care of their clients, and that should be the overriding point of conversation in any engagement that you have. So with that, let's jump in to the 10 steps to prepare yourself to be a better buyer. The first one is to start with why. You really should have a good and clear understanding of why you're looking for an acquisition. And it's one of the first questions that we ask when we interview prospective buyers is why are they interested in this specific acquisition, not just acquisitions in general. The answer that we often get, which is really part of an answer, but it shouldn't be the one that you lead with, is that you want to grow. To be honest, sellers don't have a strong interest in your desire to grow. That's not the best answer if you're asked by a seller, but for your own planning, it shouldn't be the primary driver for that either. One of the ways that I like to think about, how an acquisition strategy fits into your long-term plans is thinking about how you would like your practice to look like on the day that you sell it. And then you can work backwards and fit, any acquisition or potential acquisition into that long-term plan and have a better idea if it fits that strategic goal. So thinking about, what is your long-term vision for your practice, working backwards and making sure that, any acquisition is going to fit into that strategy. And it's not simply just about growing, but how you grow and other considerations that make sure that you get to where you want to be at the end of the day when you're ready to retire. Number 2 is to define a successful outcome of the acquisition. We used to hear a lot of buyers talking about how, any deal is a good deal for the right price. And I think that's gone away to some extent, and I hope that's the case because it's really not true. You should have really a best case scenario mapped out. What is the ideal practice that you would like to acquire, so you can compare opportunities to that ideal and not simply pursue them for their own sake. I mean, you don't want to pursue any acquisition that's available just because it's available. It should really be a good fit for you, as the seller will determine it's a good fit for them, certainly, and the buyers should really do the same. One example of that is, you wouldn't necessarily want to duplicate resources in your own practice. And so if you come across an opportunity where you have a lot of duplication of resources, which are also duplication of expenses, that might not be the best fit for you. Maybe a better fit would be, an acquisition that actually helps better utilize your existing resources and capacity, making your practice more efficient as a result of it. So take some time, create, what does that ideal look like? What would the client segmentation look like? The size of the practice, all of the important considerations about an acquisition, and then use that as your measuring stick moving forward to determine if you should really pursue an opportunity or decide to pass on it. And I know that passing on those opportunities can be a difficult thing, but it really is a smart thing to do. Again, when you're being more selective about the fit. Number 3, and this is a critical consideration, is to understand your capacity to take on new clients. And if you figure that a lot of acquisitions, the average practice size is probably in the range of 200 to 300 clients or more, and you're going to have to be able to service those clients in a fairly short period of time during the introduction period, which is generally going to be 3 to 6 month period of the handoff. That's going to require a lot, and it's going to take away from your existing time to service your own clients. And so you really need to have a thoughtful plan developed about what that would look like and what your capacity is and what size of practice you could take on. We've all been guilty of building bridges as we cross them, but in this case, probably not a good idea, and you at least want to have a blueprint for what that bridge looks like. The question that the sellers will ask and that we ask in our own process is, if you're selected as the buyer, what is your 30-day plan, your 60-day plan, and 90-day plan? And they don't want you winging it when they ask that question. I mean, certainly their feedback will be important, but you should have some idea of how you would integrate the clients and be able to get in front of the majority of them, at least the A and B clients, within a fairly short period of time. So again, preparing that in advance is going to be very helpful, make you a more prepared buyer and more attractive to a potential seller. Number 4, and this is another thing that really demonstrates, that you are very well prepared, is to get to know the lenders in our industry. And there are several banks now that specialize in funding acquisitions. As you can see here, 2 of our close banking partners are Live Oak Bank and PPC Loans. And we certainly refer a lot of business to those 2, but there are also others in the industry that are really specializing in understanding our businesses and how to fund the acquisitions. Bank financing is probably the most common way to structure deal financing today, and I would argue that it's really beneficial to both parties, and also a way that you can bring a competitive advantage to a deal. The buyers appreciate the use of bank financing because really twofold. They don't have to come up with a cash down payment because the bank is going to pay the seller at closing. And they also get a much longer note of 10 years versus typical seller financing notes, which were generally 3 to 5 years, which greatly improves your net earnings during the debt service period. The sellers very much appreciate bank financing because, again, they get paid the majority of the sale price at closing and don't have to act as the bank and carry that note themselves. And that's where you can really come in with an advantage over someone that might ask that seller to hold the note. If you're coming in with bank financing and you're prepared, for them to get that equity up front, if you will, or the monetization of it, then you're going to have an advantage right out of the gate. What you can do to prepare here is to, spend time with these lenders, understand the programs, decide which are a better fit for you and your financial situation, and then be prepared to give them the documentation that they need when you get into a deal. And generally that's going to be 3 years tax returns, reports on your practice, valuation, etc. The next item, and this is an interesting one that we learned over the years from a lot of the buyers that we've worked with, is to know the worth of your own practice. And what we started seeing is that a lot of buyers were getting valuations simply to educate themselves around, how to value a practice, what are the considerations of value, and also to create, kind of a foundation that they can go back and compare to after they get an acquisition. And so they can see what the value was ahead of the acquisition, and then a time later get a new valuation and see what the overall impact of that investment in time and resources was. It's very, very insightful because then you're applying, the value to a practice that you know quite well, of course, your own. And then later, when you can look at the reports and so forth of, a potential acquisition prospect, then you'll have a much better view of what to look at, how to look at it, etc. And we found that those folks who have done exactly that, they just come to the table better prepared. And this is, part of what we're trying to help you at, is just being a better prepared buyer, better educated, and ready to get in front of a seller. Real quickly on our own valuation process, we use 2 different methodologies of value. We conduct both a market-based analysis and an earnings-based analysis. And the value that we assign to the practice is a combination of those 2 results, or the average of the 2 results. If you are an advisor in one of our partner firms, which you can see at the bottom of the screen, that being Northwestern Mutual, Ameriprise, Raymond James, or Cetera, you get a $400 discount off the standard price of $12.95. That makes your valuation $8.95. And then we've also very much simplified the data collection process for those partner firms, because we collect the majority of the data from specific reports that we give you instructions to pull. So you don't have to go search for the data and fill out a lengthy questionnaire. It's actually quite simple. One of the key areas that people find value in our deliverable is that we'll spend an hour going through the results with you. And it can be really helpful in terms of, identifying areas for improvement, certainly helping you manage and improve the equity in the practice, showing you things like how does your profitability compare to other practices, which is a pretty key area these days. There's a lot of great information that goes beyond the number that's assigned, the value that we assign, and we certainly want to spend some time going through that and discussing it with you. So getting back to the list, number 6 is to prepare a communication to potential sellers. And again, as you're doing this, and this should be a written document of at least a couple of paragraphs, talking about your practice, about yourself, why you got into practice in the first place, what you enjoy about client service, what you're looking for in a potential acquisition. And keep in mind, again, whenever you're communicating with the seller, it should really be about 80% about them and their clients and 20% about you. The seller, again, doesn't have, well, let's just say that their primary motivation is not how you're going to grow your practice, certainly, but who's going to take care of their clients. And so that should be the way that you position communications, is really about how you'll take care of their clients, how you'll continue their client service legacy, and how they can be confident in telling their clients that they've selected you for those reasons. So spend some time, prepare this. If you become a buyer on our advisor legacy platform, which Tony suggested, and we strongly suggest you do that, there's great opportunities there. You can actually get an elite buyer account, which will allow you to build an online profile, and it'll direct you to put in the proper information that sellers are looking for, and to write these items that I've described here. It's a good exercise. It's basically providing you with a great elevator speech that you'll be better prepared, and again, not winging it when you get in front of a potential seller. Number 7, and this is the one that we definitely see overlooked, is to be acquainted with your own P&L. If you're not operating as profitably as you should be, which is one of the things that you could see in our valuation deliverable, then you want to fix that before you get yourself into a larger debt situation by financing an acquisition. And keep in mind, it takes some time to pay off an acquisition, and so there will be a number of years where obviously you're going to have a reduced net earnings due to the debt service for the acquisition. And it's not going to be the case that you're going to buy the practice and it's going to solve your financial challenges right away. That takes some time. It's certainly worth it in the long run. But if you do have challenges with profitability, you really want to fix those first. And it's a good opportunity for many advisors who don't spend enough time working on the business. And it's pretty critical that you do work on the business, act as the CEO, the chief financial officer and the COO, and really make sure that you're keeping track and managing those things. Number 8 is engaging a coach. It's really a great time, if you don't work with a coach or franchise consultant, to consider doing so. One of the things that we've noticed over the years on our practice sales is that a majority of the candidates or prospective buyers who have really, been selected as finalists for our sales have had coaches. And I don't think it's a coincidence that they have. I think what we've seen is that those folks come to the table better prepared, they present themselves better, their offers are more thoughtful. And a lot of that, you can see the coaching in it, frankly. You can see that the coaches prepared them. They've had a lot of acquisition experience, because they've worked with a lot of different advisors, and they've transferred that experience to, those folks who are looking to purchase. The other area, certainly, that it'll be really instrumental is, once you've purchased a practice, there's a lot of heavy lifting to be done, and it's a lot in a short period of time. And certainly having that sounding board, again, with that experience in your corner, is going to be extremely helpful in you planning and managing that that fairly difficult transition of time. Number 9 is to know the rules of your broker dealer. And so there are, a couple of elements to, what needs to be done in a sale, to close, complete formal agreements and so forth. And one of the important elements is any of the requirements of the broker dealer. Generally speaking, there are departments there who have a specific staff to help you, and they're very helpful. And so they're going to step you through things like, are the client deliverables of the seller that have been started, are they going to be completed prior to the transition of the clients? Other things like, how can the seller stay affiliated to support the transition of clients? All of those are based on the requirements of the BD, and the better that that, again, is going to come off really well to the seller. If they ask you, how do we do this? How do we do that? If you can have those answers, it's going to give them a lot more confident than simply saying, oh, well, we'll look into that, which isn't a terrible answer, but it's not as good as knowing those things. And so what you can simply do is, download their checklists from the websites, maybe spend an hour speaking with those departments and, learning what is important to them and what needs to be done. And it, again, just makes you better prepared, and you'll come across as more educated and prepared. Number 10, and we kind of saved the best for last, is you really have to start networking. There are a lot of good resources out there, like our Advisor Legacy platform, where you should participate, and you might come across, potential acquisitions. But even though all of those resources exist, most deals are still made through simple networking. You're getting out there, meeting advisors in your area who are, around retirement age, forming relationships with them. So when, they're ready to exit, that you will be top of mind, you'll be someone that they immediately think of, and, and also trust and know, and are likely to, give you one of the first opportunities at purchasing their practice. So it's really something that you have to invest in. And I tell people, this is based on our own experience, that if you do these things and you're out there networking and you have a real strategy that you're executing on, I think it's a reasonable expectation that you could purchase a practice within a 12-month period. And that's been my experience working in practices as someone who's actually pursuing acquisitions. We generally would pursue or close one deal within a 12-month period of that activity. So get out there and network, identify those gray-haired advisors in your area, make sure that you're, constantly meeting people and, putting some effort in, take them out to coffee, so on and so forth, and, just create a pipeline of potential acquisitions that you can later, pursue when they're ready. So we talked a little bit about our own platform for practice sales, and that's called Advisor Legacy. You can visit the website and register as a buyer if you're not already at www.advisorlegacy.com. And I'll just walk you through how this process goes from a buyer's perspective, so you have a better idea of what to expect if you do express interest in one of our sales. So again, you register as a buyer. You can do so for free, or you can upgrade for $19 a month to an elite buyer status, which allows you to build a robust profile online that we'll use in our initial vetting process, and the sellers get to review that profile. So what we do in the process, and we represent the seller, is we meet with the seller, discuss their goals and so forth. We collect a lot of information on the practice, reports and so forth, and we create a profile that's then published on the Advisor Legacy website. All of the buyers who are registered will receive the listing of that practice when it's published. If it's a sale within one of our partner firm broker dealers like Ameriprise, only other Ameriprise buyers will be able to see that practice listed for sale. So no one outside of the broker dealer platform will have access to the sale. And we really think it's important keep a sale in the same platform if at all possible, which generally we do. All of those buyers will have an opportunity to express interest in the practice. So they go in, review the details of the profile, decide if initially it seems like a great fit, and express interest. Once that window has closed, then we're going to do our due diligence. We'll look at the profiles. We'll do other types of research. A lot of the buyers we know just through other interactions. And we're going to review those candidates with the seller and take that group, which is generally fairly large to start off with, and narrow it down to usually 10 or less candidates that will then invite to place a bid on the practice. When they're invited to bid, they'll have access to two different areas. One is quite a number of reports that we've uploaded to the seller's profile with the client information removed. The buyers will use that to conduct their due diligence. There'll be other information like practice expenses and so forth. And the other thing they'll have access to is the deal terms that we're looking for, and we will have worked with the seller to create those terms. Any other due diligence that's requested by the buyer during that period, we'll certainly try to facilitate, and then we give a certain period of time for those bids to be submitted. If anyone submits an offer that we feel is not competitive with the other offers that are received or below what our expectation is, we'll certainly let them know and give them an additional opportunity to reconsider. Once the bids have been received, we'll do another round of vetting, narrow that group down to generally 5 or less who we're going to take into an interview process. And we conduct the interviews with the participation of both buyer and seller. And that's really where the decision is made on behalf of the seller. Generally speaking, at that stage, everyone will have a pretty similar offer, which is our goal of collecting the offers in advance. And then the seller can really focus on the fit, which is the most important consideration in choosing the right successor. So through the interview process, we ask a standard set of questions to the buyer so the seller can get to know them, their practice, their values, etc. And then the buyer has an opportunity to ask the seller questions. Usually, once the interviews are completed, there's either been a clear favorite that's selected, or in some cases, they've narrowed it down to maybe the top 2 or 3 candidates, and then we'll conduct further due diligence like office visits, maybe additional interviews to really narrow it down to a finalist. Once the buyer is selected, then we help both parties complete the balance of the transaction, and that includes completing the formal legal agreements, getting the bank financing started if that's the case, and it usually is, making sure that the requirements of the broker-dealer are completed, and then we actually help plan the client transition as well. We have a lot of best practices in that. Since we represent the sellers, the majority of our fee is to the sellers. As you can see, they pay us a success fee based on 2 to 6% of the sale price. The buyer pays a transaction fee of only 1% of the sale price. So that's the Advisor Legacy platform. Again, we strongly recommend that you use this as one vehicle to find potential sales, and it's a good one if you're in one of our partner broker dealers, which is where most of our sales are. So with that, I'm going to hand it back over to Tony to close it out and open it up to some of your questions. Thank you.
Well, thanks, Todd, for that great information. At this time, we're going to open it up to some questions from our viewers. You can go to the GoToWebinar control panel. If you raise your hand, I will unmute your telephone line, or you can type in a question. So while we're waiting for a few questions, I want to suggest that you take our schedule a free 30-minute consultation, or take our free online assessment, and you can do that on our website at keymanagementgrp.com. If you want to get a hold of us by phone, you can see the 800 number. And if you want to get a hold of Todd, you can see his direct dial information on the lower right-hand corner of your screen. For those who are interested in getting a business valuation to understand the own worth of your practice, you can do so again on our website. You can place the order right online for $8.95 if you're one of our partner firm advisors. And we turn those business valuations around in 7 to 10 business days. So if you haven't had one done in the last 12 months, I would encourage you to do so. Well, at this point, it looks like we do not have any questions, so I want to thank everyone for joining us for today's webinar. Hopefully you found it informative and helpful, and I want to wish all of you the best of luck in your acquisitions. Thank you.